Assalamu alaikum.
Вітаю.
Miraba, Lavas.
안녕하세요.
We at Sinofy exist to bridge the gap between two worlds, East and West, tech and business.
21st century is the Asian century. The rise of China and Southeast Asia and our access to hundreds of millions of dollars capital makes it easier for tech companies access this capital through our infrastructure. Very few companies in Europe and Eastern Europe have any kind of understanding about Southeast Asia. And Sinofy gives us great opportunity in 12 languages, access the capital, access infrastructure, and develop network.
We help the Sinofy fund and empower the companies in the world's most digitally connected region, China and Southeast Asia.
Dozens of companies are benefiting from our tech expertise, dev teams, and outstanding solutions. We focus on blockchain, IoT, cybersecurity, artificial intelligence, and game dev.
Ladies and gentlemen, welcome to our second webinar of innovation series, China and Southeast Asia Startup Ecosystems Decrypted. My name is Laura, I'm Events Coordinator at Sinofy Group, and I'm very happy to see you all tuned in today. Innovation is our series of online conferences exploring technology and business within the APAC region. For this particular conference, we have selected Asia business experts to share about VCs, consumer trends, working and recruitment environments, as well as the cultural differences when doing business in China or Southeast Asia. I believe that this knowledge will help you understand how to operate and foresee the opportunities within the region. So with no further ado, let me introduce our first guest speaker, Rachel Wong. Rachel is the founder of Founders Doc, a legal tech company that provides support for early stage companies. Rachel is specializing in legal advices for startups, legal and consultancy services, and legal templates. We're very thrilled to have her here today sharing her legal knowledge from west to east. So welcome Rachel Wong. Let's listen.
Hi everyone, I'm Rachel and I'm from Founders Doc. I'm a lawyer based in Singapore and I've worked in Singapore and London. As a lawyer, today we'll be going through a couple of slides to compare the legal landscape between Southeast Asia, the USA and Europe. A lot of people club Asia into one monogamous territory, but there are actually lots of nuances amongst different Asian countries. And today we're going to focus primarily on Southeast Asia because that is where I'm based. I'm based in Singapore. I love Southeast Asia and I would love to explore how Southeast Asia differs from other continents in terms of legal landscape and how we can work better together. Today's slides will comprise three main components. First, we'll be talking about the most distinctive element of Southeast Asia's legal landscape, of course, through my lenses. The second thing that we'll cover is the vibrant startup ecosystem in Southeast Asia. That really struck me when I came back to Singapore after studying for a couple of years in London and coming back, after working as well. And the third key topic that we're going to cover in today's slides is common oversights in the legal checklist when entering Southeast Asia. So without further ado, we're going to start rolling on the first key topic in our slides. The most distinctive element of Southeast Asia's legal landscape. Of course, Southeast Asia comprises of many different countries ranging from Singapore, Malaysia, Indonesia, Thailand, you name it. Each country is characterized by its own unique cultural qualities. So transacting business in Singapore will be very different from transacting business in, say, Malaysia or Indonesia. But in my opinion, the most distinctive element of Southeast Asia's unique landscape is the significance of family-owned businesses. Of course, there are other types of businesses which have got very strong footage in Southeast Asia as well, such as sovereign-owned companies. As many of you will be familiar with the likes of Temasek and GIC, these players play a significant role in the Southeast Asian landscape. However, when you're looking at private businesses and private enterprise, family-owned businesses are very significant. What I also observe is a transition between first generation, second generation, and third generation family businesses. So a lot of people in Southeast Asia may have migrated from other parts of the world, and that we call them the first generations, like my grandfather. And we see people building different businesses and evolving the businesses as time grows. So one typical roadmap could be like my family. They started off in Southeast Asia. My mom went abroad to study, and now I've gone abroad to study, and we're bring back fresh ideas in Southeast Asia and seeing how we can mesh the two cultural differences based on what we've learned overseas, as well as what we gather based on the cultural nuances that we have at home. So what we see is first generation families building businesses, second generation maybe working in MNCs or tweaking the family businesses, and the third generation looking at existing business structures and saying, hey, how can I make this better? And this translates into different legal norms. I would show you an example, illustrate an example. So in the manufacturing business, for example, in America and in Europe, we see very robust terms and conditions, master agreements, very robust legal teams vetting the legal contracts between commercial parties. But I know for a fact that in Southeast Asia, the use of invoices itself is how a lot of businesses are run. So what I see sometimes is instead of having long, lengthy master agreements with very lengthy terms and conditions, Asian businessmen tend to do business based on relationships, based on a pretty light and thin legal paper. But that does not mean that the business isn't good, or that doesn't mean that the business hasn't been well structured. It simply is a reflection of the different cultural norms that come into play. So when overseas investors enter into Southeast Asia, and when they do this thing called legal due diligence, they may get quite surprised that the legal documentation they see may not be as robust as the ones that they typically see, but we're just looking at things through different lenses. Moving on to our next key topic, the vibrant startup ecosystem in Southeast Asia. So Southeast Asia is characterized by a young and growing population. What really struck me when I first came back from London 4 or 5 years ago was when I visited my friends in Jakarta, I came across this app called Gojek. And Gojek is not what we see it as in other countries. It was like a multi-app with various different functions ranging from Go Massage to Go Car to Go, you name it. It was like an e-wallet as well. And I was very surprised because that was the era that characterized Uber as a singular app, mobility app, where Grab was a singular mobility app as well. And I was thinking, hey, there are so many vibrant startup ideas that was brewing in Southeast Asia that we didn't know about, maybe because of language barriers and the lack of publicity. But Southeast Asia is filled with so much vibrant ideas, which it's just a gold mine waiting to be tapped on. So the three features that I think characterize Southeast Asia is a young and growing population with a desire to succeed. I'm sure a lot of people around the world have a desire to succeed, but what really characterized Southeast Asia for me when I came back was the hunger that I saw in terms of the hunger to succeed. So we have younger populations working very hard, and we have incoming Asians who have lived overseas who are also hungry to make their mark in their businesses. And that translates to lots of opportunities. What really helps is that in certain countries, perhaps not so much Singapore because the cost of living is very high, but in certain countries, the barrier to entry is not very high. So a lot of my friends came back from, after studying overseas to set up their own businesses and to, start their own companies. And the cost of building and setting up the company was not significantly so high that it was a barrier to entry. The third trend that I observe is many Southeast Asians applying global principles in local context. Now, whether or not they study overseas, we have the internet, we have mass social media, and we observe different trends that are happening around the world. and we apply it to the local context, but in its own unique way. So for example, we can take Indonesia as an example. What is unique about Indonesia, for example, is not a lot of people have bank accounts. Not a lot of people have information that people typically take to assess a credit score. So we have new startups coming into Indonesia to find innovative ways to provide the credit scores that's necessary for people to lend people money. And since credit cards are typically issued by banks, they've come up with innovative ways to say, how can I still provide credit to the young and growing population that's increasingly affluent without relying on the traditional ways of assessing credit scores that doesn't not work in Jakarta or in Indonesia. So that is just one application of the unique ways people are coming in to solve problems. The other thing that I think is important when we look at Southeast Asia as a vibrant startup ecosystem is to understand the nuances between the different countries. So when establishing a business in Singapore, we can't just copy and paste the same business model in different Southeast Asian countries, because as much as outsiders look at us with a lens that, hey, everyone is Southeast Asian and they have maybe similar cultural habits, but the nuances between different countries is actually quite significant. So even when I would consider myself a semi-businesswoman, expand into different Southeast Asian countries, I'm quite careful about the different cultural nuances that are present. How, for example, they perceive women. How should I present myself on the table? How should I speak to elderly people and show them the respect that they need? So, being aware of the countries and the culture that you're entering into is quite important when entering into the Southeast Asian market. But that's not to say that this is a barrier. You just got to get used to it. Now we're going to spend a little bit time on the common oversights in the legal checklist when entering into Southeast Asia. So the key thing that I hope would be taken back at the end of this presentation is this single message. The legal checklist that applies in the US and Europe may not always apply to Southeast Asia. Well, this could be a good thing, and this could be a more negative thing, but let's explore it further. On the first bullet point, having a good understanding of the local cultural fabric of the country is important. And I'll use an example. A lot of Southeast Asian venture capital funds have quite different legal terms that they request from founders. But that is not to say that they are more aggressive, and that is not to say that they're less founder friendly. It is just that the cultural norm and what they're used to when signing documents with founders tends to be a little bit more robust and aggressive. And the founders will counter by saying that, hey, we trust the reputation of the VC funds over here, and even though the terms are a bit more robust, we are willing to accept those terms. So that is one example of, maybe entrepreneurs entering in from Silicon Valley may look at the legal terms in Singapore and say, hey, these do not look like friendly terms, but that could just be a reflection of different cultural norms. And that kind of pivots the other way around as well. Some Southeast Asian founders or Southeast Asian founders who have established their businesses in Singapore but have lived overseas for a while actually want to go overseas to get investors on board because they prefer the legal terms that are presented overseas. But I think at the end of the day, the essence is the same, which is that, the VC funds are keen to support the founders, but the language they speak is simply different. So having a good understanding of the local cultural fabric of each country is important. And that is just one example of how, that could manifest. The second point is keeping in mind that the working circle is a small one and that the reputation is quite important. So Southeast Asia is like this little, a fun clubhouse, and people know each other. So the very aggressive and very, business-like tactics that could be employed overseas or in different countries where the market is more competitive may not exactly work the same way in Southeast Asia because the network is pretty small. So one thing that's very important when you start building or entering the market is building good relationships first, having trust. And once you build a good rapport with different business partners, it sets a really good sort of like basic ground for you to build more connections and more networks. As we already know, the legal systems in different countries differs, and the legal systems in developed countries would differ from developing countries. And the legal system also differs from country to country in terms of what they would like to enforce, how fast they would like to enforce things and whatnot. So in this context whereby, legal systems are perceived in a different manner in different countries, the value of good relationships and having a community and network and support system that would back you up is very, very important. So that kind of brings me out to my last point for this particular slide, which is focusing on what is not written together with what is written. In fact, I would elaborate in my next slide a bit more about this phrase, but focusing, obviously what you have on written paper is important, but what you have not written on the paper is equally as important in every context actually, but much more so in Southeast Asia, in my opinion. One example would be, the strength of sovereign wealth funds in Singapore is very important, and building a good network with all sorts of different stakeholders is important. So the last thing you want to do is to establish a negative relationship with one key stakeholder, which either spreads the word spreads around that this person is particularly aggressive or does not hold his promise or whatnot, or is flaky. That word will spread around. So focusing on what is not written together, what's written is very important. And the other thing is also understanding that and dealing with a person who's younger and perhaps a bit different, will be very different from someone who's a bit older. And I've seen instances where people who have signed the shareholders agreement will say, yes, I understand this was what was signed on paper, but this was not what was intended at the point that the document was signed. And on that basis, they actually litigate and say that, what we signed was not what was intended. And I would expect you to know that even though we signed this, let's say, for example, even though we sign a clause that says that we will sell the company in 10 years, we actually did not mean that. Obviously, I would understand, foreigners scratching their head saying like, it's black and white. It's we said that we're going to agree that we're going to sell the company in 10 years. But they could be coming from a perspective of like, yes, this is a family-owned business. We value the cultural heritage associated with business. We value the brand name associated with business. This is a pride to us. And we thought the meaning was that you're going to sell it back to us. So having a clear understanding of what people actually intend is very important. Obviously, as a lawyer, I would have to say that the best way to protect yourself is not only to make sure that you read what is in between the lines, but if possible, you can also try and distill as much as possible what is in between the lines and make it crystal clear before you enter into a transaction. So for example, if people rush into a term sheet or people rush into an agreement and say, let's just start doing the business. We're a businessman, we understand what we're talking about, and you just want you to sign an agreement, maybe you can hold back a little bit and try and understand what they truly are trying to say with each clause and provision, and try to really understand what their aims and objectives, what's the politics behind the entire business before you actually sign a document. Because once you sign the document, it's very hard to go back into the negotiation stage to try and figure out what people are talking about, or if you try to unsign what you've signed because you feel that, hey, there was some sort of misunderstanding, then you could come across as being, not trustworthy, not a person of your own word. So how about a significant quote here? So there's so many significant quotes that we could describe Southeast Asia with, and I'm sure all of you would characterize Southeast Asia with your own significant quote. But my own significant quote for this particular set of presentation would be focusing on what is unwritten, what is unsaid. So many a times when I enter into business meetings, I try to read the room, and I do understand that when I was working overseas, people just come in with their ideas. They're very forthcoming with their ideas, and they'll just present, right? And the most eloquent business presentation wins. The most eloquent person wins. The best business idea wins. But sometimes in Southeast Asia, I feel like I have to pause a little bit, try and understand my audience, try and understand who I'm dealing with, try and understand what's the dynamic, what's the politics behind it, and then proceed from there. So one interesting story that I read about was, in let's say UN meetings, people will be talking, people will be sharing their opinions, people will be publishing papers or publications to express their opinion, to express where they're coming from. They're very vocal. But there is an equivalent organization in Southeast Asia called ASEAN. And what I read, and I've never been to an ASEAN meeting, so I cannot verify whether it's true or false. But what I read is during the meetings, nobody will say anything. It's quiet. Things will be said, things will be considered, but the real decisions are made in the restroom. So whilst people are washing their hands, they'll be like, yes, okay, I think that's a good idea, or maybe I think I want to do this instead. So that is the first thing which I think really struck me, which is really reading the room and understanding how decisions are made, and however the decision is made overseas may not apply here. And that's the same thing for me when I went to work overseas as well. I was brought up in a traditional Asian culture whereby you don't talk too much, you don't talk over people, you don't you try to keep silent, and you try to remain very humble. So when I was at meetings or when I was at conferences, I didn't want to vocalize myself so much, and I would keep my opinions to myself. And my traditional thinking was, my hard work will pay off, and people will understand me through my hard work. But I had a feedback from my supervisor then saying that, hey, you're too quiet. People don't actually know what you're doing. I was like, oh gosh, I worked until 11 p.m. every day. Nobody knows what I'm doing. The big boss does not know actually, what's your contribution to the project. And you do not know what's your intention because you don't express yourself enough. So that was the problem that I faced when I worked in London. They said that I was not expressive enough. I was not putting my weight forth enough. But then it also flips around the other way when you come into Southeast Asia, which is because we were brought up with the thinking that, or at least I was brought up with the thinking that when you are in a project or something, you try to keep quiet and just work hard, and people would know that what your ultimate contribution to the project is. So I kept very silent, and I don't want to overexpress. So when overseas entrepreneurs come in, they could come in with a blast. They would come in maybe with the expectation that people will want to hear their ideas, and they may feel a bit demoralized when they feel like they're being turned around, people are not listening to them. But pause for a moment, because that is just our culture. Maybe it could have been a cultural misunderstanding. Maybe people just want you to slowly ease into knowing you first. And when they know you and when they build that rapport and trust with you, they would be more receptive to supporting your business idea. And what I've also further seen in Southeast Asia is once you build that trust and rapport, with a particular person, that person will support you however they can in their ability. So that has been a very interesting learning journey for me in the past 10 years, especially moving around in different countries. So the significant quote that people have when they enter into Southeast Asia or when they move out of Southeast Asia would differ from person to person. But what I personally have felt as most valuable has been the phrase, focus on what is unwritten rather than what is written. So that has been an amazing, interesting story for myself. So I hope that me sharing my story and me going through the different principles and different cultural nuances and all my own story, my own culture shocks, both being in Singapore, overseas, and coming back again, would be helpful when you enter into the Singapore market and the Southeast Asian market. It is a land of great opportunities, but we just have to navigate it right. And same thing for us when we go overseas, we just got to make sure that we navigate the market right as well, and to make sure that we reduce misunderstanding, we reduce the room for conflict, and that we are able to build businesses together in a mutually beneficial way. Thank you.
Thank you, Rachel, for your legal and cultural insights. We are now ready to move on to our second guest speaker, Tobias Bauer. Tobias is principal at Blockchain Founders Fund, which invests and builds ventures of top-tier startups. Also being a mentor, a venture partner, Tobias will share with us how to attract investment for early-stage startups in China and Southeast Asia. Let's listen.
Hello, everyone. My name is Tobias. I'm an early-stage technology investor currently based in Singapore. I'm with the firm called Blockchain Founders Fund, which I joined about 2.5 years ago, very early on, and sort of been driving, sort of early stage investment in China in the very beginning, but now a bit more across Southeast Asia and also from a global perspective. And what we're going to talk about today is really focusing on startup ecosystems across China and Southeast Asia, and more in particularly about really the key developments, especially in early stage investment landscape across the mentioned markets, because there's a couple changes which are happening right now on a very fast pace, which have been built up in China and now sort of slowly trickled into the Southeast Asia region as well. And I think that's a very interesting topic to cover, both interesting for startups and founders, but also interesting for investors who are looking into that space, just because it is really, really fast moving and extremely fast developing. I think the first point I want to start with, I want to just give a quick background of sort of what we're doing, and take that time to sort of set the baseline for that. Like I said, I'm with Blockchain Founders Fund. We started about 2.5 years ago. We've always been focusing on very early stage startups between the pre-series, or sort of the pre-seed round to pre-series A round. We look at especially emerging technology, which has been a big focus on the blockchain space, on the crypto space as well, but also just emerging technology, which comprises of artificial intelligence, machine learning across the world. I myself have been working both in the operator side as well as on the investment side across China, Thailand, Cambodia, and Southeast Asia. So hopefully you can add some value today. Up to date, we have invested actually about 55 or almost 60 companies now across 6 continents. We have invested in 6 companies in the MENA region as well. And we have a new fund coming out of Singapore right now, which is about $75 million. And over the next couple of years, we're going to do about 200 more investments across the mentioned stages and across the mentioned technology categories. We do already have a crypto unicorn, which we're very proud of. It's called Splinterlands. It's together with Axie Infinity in the play to earn space, the gaming side, now one of the leading companies on a global scale. And yeah, we hope to find many more. So yeah, happy to get in touch with any interesting founders. If we look at early stage investing, there's a couple of interesting criteria I want to point out, just because it's very different from investing in a Series B, Series C company, or even at the pre-IPO stages, where a lot of bigger investors with remarkable names in the industry come in. Because typically when you invest in early stage companies, you just don't necessarily have all the financial data on hand, right? So we have invested in pre-revenue, pre-product companies where there's not much more than a vision, founders, and just a pitch deck with a go-to-market strategy, and a product in an MVP stage or in a beta mode. So obviously you need to have a very different viewpoint on that, right? And the same thing is for founders. When you're looking for early stage investors, I think it's really important to have the right strategic investors on board who of course can give you the financial resources, but also on the other hand, are able to give you more the strategic resources and build connections into interesting areas or industries you might not have the perfect connections or network within that space. So for us, it's always important to be founder oriented, which means that the founder's background, the founder's vision, and of course the founder's knowledge in that space is one of the most important things we look at. And that's a big part of every first conversation we're having with startups. It's just understanding why they're building this, right? Why are they going into the very difficult route of being a founder, and especially in emerging markets, which might be even challenging because not a lot of infrastructures are being built yet. Of course, that differs between China and Southeast Asia. We're looking for innovation risk because if you're in early stage startups, you need to be better than your competitors, right? Especially if you go into an area where there's already been a lot of competition. It's really about figuring out how to be better, how to be more innovative, how to be faster, to go ahead and jump the curve. Founders need to be determined, coachable, flexible, passionate. That's all great words, but it is just an important factor just because we want to be close with the founders. We want to help them, support them. And of course, the founder is an expert in his niche, in his industry, in his space. But sometimes an outside perspective from a fund point of view, where we see a lot of different business models, might even give a good hint or a good next path moving forward. In the end, I think early stage is just key to look for the underlying problem which has been solved. Right? What is the real problem? What is the issue in the market, and why are you allowed to be in that market, to say it very harsh, right? What is your secret sauce essentially to exactly penetrate that problem? Is your go-to-market strategy feasible, right? And I hear this a lot from a lot of different investors is, of course, financial models are interesting for early stage investors as well, but it's more from an assumption perspective. Right? If I see that your assumptions make sense, then I know that you have thought through, right? You understand the market, you understand certain metrics which are common, and you're sort of grounded in that regard, that you don't have crazy assumptions which might not be happening, and then always lead to that kind of hockey stick model in valuations in early stage startups where they're going to grow 100x and so on and so forth moving forward. And again, the last point is what I mentioned here is, and that's especially important for founders. Like if you're a founder and you have a certain vision in mind, right? Maybe not every founder wants to be the next unicorn. Maybe some want, but it's important to understand the right fund you're choosing, because every fund has to make fund economics work, which means they have to make a certain return on their money if it's a financial driven fund. So it's important to understand which fund actually makes sense and it's aligned with my vision, so I can grow as sort of I want to, or the business needs to, without getting pushed into certain directions just because certain exit strategies, timelines, or money multiples are expected from you as a founder and your startup. The approach is challenging because as an investor and the same as a founder, you always lack their circles, right? So as a founder, it's hard to get attention from venture capital fund just because you're not able to show a lot of traction at that moment, and you need capital to show that traction. So that's like the kind of circle in itself. Of course, if you have done a reputation in the space, you've had previous exits, then you probably have a great network you can tap into. But especially first-time founders, they have the same sort of challenging approach. But also from a venture capital perspective, or from an investor side of view, it is difficult to find early stage startups, especially when you look at them, because typically when a startup seeks investors' money, they already reach some certain stages, right? Because before they have family friends rounds, they probably have angel rounds, or get a grant, or join accelerators in that regard, where it's not always that easy to get access. So tapping into those founders circle, provide more than capital, provide that hands-on money, as I call it, which actually interesting point. But there's money, obviously there's smart money, and I call it hands-on money, which is the next step where I think VCs and as more sophisticated investors will go to, which essentially means that you as an investor really get your hands dirty and help the growth and help the founders drive the business forward. I like the strategy of especially early stage, starting off with a smaller ticket size, let's say 100, 200K. And then once you work with your portfolio companies and you see how they hit milestones, and how they hit deadlines, and how they work and how everything performs, then you double down and put larger checks in a company to prevent dilution, but also to keep building that vision you're looking into. Invest in what you understand. I think that becomes very obvious in the current crypto and blockchain space. Everybody wants to get in, but not everybody is completely 100% aware of what's happening. But again, here, do your research and just really understand sort of what you're tapping into. Now, going a little bit away from the pure investment perspective, I love to touch on, firstly, on the ASEAN or even a bit smaller, maybe we can say Southeast Asia. ASEAN is a tremendous market, but Southeast Asia itself is also a really huge market. And there's a lot of development happening in these markets. And I put down a couple of key figures, which I think are interesting to understand and to keep in mind. So first of all, the population is about 700 million. That's bigger than the US, that's bigger than Europe. That's a tremendous market of people who are young, right? And who are driven and who all have access to smartphones and internet and cheap data, or relatively cheap data. If you compare it to India, one of the cheapest data in the world, same as Cambodia, where I lived about 10 months and really explored that market. It's fascinating to see how fast that technology side of things is driving and how many doors it has opened to both businesses, but also to consumers. In ASEAN alone, there are about 575 million internet users, which is a tremendous market. There's a lot of economic contribution, which can be resolved or partly resolved through technology. And where, of course, fintech recently exploded just because a lot of people have no credit score, no credit history, and therefore unable to have a bank account. And with certain companies who enable, wallets, for example, where you can top up through an agent network, pay fast is a good, interesting example. There's Click out of Cambodia, which is an interesting example, where they really enable people to join a digital wave and pay without cash, which was again driving a big driver during COVID because people were afraid to touch, real money because essentially it could be transmission of a disease. Now, I think right now, obviously, the GDP per capita in all these countries is still growing. It's relatively low in some of them, but it is expected to be around 7K, which is a similar journey as China has been going through, which I'm going to mention in a couple of minutes. And that will increase or has a tremendous impact on consumer spending. And consumer spending has been driving e-commerce, it's been driving a lot of even GDP in the end, where we have about 2.7 trillion consumer spending, which is basically driven by 70% of the middle class. Once they reach it, that they will have a lot more access to capital, contributing to the economy and making a circular economy work. And again, like just summarizing what essentially is happening in C or more broadly in ASEAN is that growth is driven by one, favorable demographics. People is very young. You have increasing urbanization where people want to go into cities, work, and sort of join disruptive technologies. People are leapfrogging, if you use that overused word, going from having no access, not going to a check, not going to a credit card, they're going directly to mobile first and use their phone to pay at food shops, mom and pop shops, and all these things. Then you have improved infrastructure, which is also a lot driven by governance. Just one example is Cambodia. Again, they increased or they introduced Bakong, which is a blockchain-based payment switch where essentially you're able to send money within the country for zero costs to different banks. If you compare this to Indonesia right now, making a bank transfer is about 50 cents. That's basically the question: should I transfer money or should I buy a bowl of rice? That makes a tremendous impact in some of the people's lives. And then again, the last point, which is also partly government driven, is streamlined regulatory frameworks, which enables you to build on certain infrastructures, legal infrastructure, which makes making business or joining that tech reform a lot more safer and organized. I think here is a very interesting point, and I think if you have lived in Southeast Asia, you probably came across this green color between Grab and Gojek, which sort of introduced ride-hailing and the gig economy towards this market, which been driven by people got smartphones, people are able to join, and people need to go from A to B, and there's sometimes not a perfect public transport system in place, and that allows people to now have food delivery, have that sort of part of the gig economy, which has been introduced by Uber or Didi and all these places in China. Now, the interesting part is that these companies started off pretty basic in sensor and technology, but they're now all layering more services on top of it, which makes it very sophisticated, right? When Grab pivoted into become a digital bank, essentially with a payment wallet where people can use Grab Pay or Pay Fast or Shopee Pay now even to join the digital transformation. And that's all been obviously driven by consumers, right? Consumers join the internet, they get access to internet, which increases their resources tremendously to both knowledge, but also just understanding what's happening, which then also makes them much more sophisticated and they have much more higher standards, which then makes it hard for businesses, and especially small and medium-sized businesses, to join that tech journey, just because they don't have all these mechanisms in place, right? You can obviously order from Shopee and you do that, but the small mom and pop shop, which has been working well, is kind of left outside. And then the whole B2B side exploded, and a lot of startups in the tech space wanted to help them and came up with great mechanisms and great products to help those small and medium-sized businesses digitalize and join that ride and actually service their consumers much better. And that's been sort of happening in Southeast Asia. And again, that's been driven by all these favorable topics. A couple of key success factors, as I want to call them, right? You have obviously key markets here in the region. I'm going to exclude China for now because it's a separate topic, but the three markets are essentially Vietnam, Indonesia, and the Philippines, just because they have a lot of people, the population is very high, they're very young, and they all sort of want to join this development. And the GDP per capita is increasing, and then certain countries are building a hub, right? Thailand is now more or less the blockchain and crypto hub, with together with Singapore, obviously. But Singapore reached some certain maturity that these very early stage infrastructure B2B and B2C companies that have been here for a long time, and they're not changing anything accordingly. So it's a very different landscape, but still very interesting. Key industries are, obviously fintech, because there's a huge unbanked population. If you looked at Philippines, I think more than 70% don't have a bank account. EdTech, because schools are closed essentially right now. I mean, it's getting better, but people looked for other ways to reskill themselves, especially since new jobs are being created, and a lot of jobs with our future kids are going to have, or the next generation will be having, they don't even exist yet, right? So there's a huge upskilling going to be needed in a couple of years, where of course the access to education, to technology is breaking the barriers quite a bit. E-commerce, joining that wave has been tremendous success. And now with that being sort of familiar in those markets, the actually direct to consumer, where people are, or social commerce, as you want to call it, is coming into play, where people now use WhatsApp, Facebook, and just becomes a much more social driven aspect in terms of purchasing, in terms of influencing, but also in terms of promoting. Gaming is something which is, especially blockchain gaming, which blew up extremely in the region, especially if you look at the Philippines, where Axie Infinity helped people generate 2 to 3 times more income than their regular job. The same is for other markets as well. Even Splinterlands sort of been very strong in those markets as well, and that's been again then accelerating the whole B2B space, that they can keep up with those trends. Key operations, I mentioned before, is really about building networks, right? It's about giving those companies fundraising support, understanding where the talent is coming from, and all these big unicorns we have in the region now are definitely a great catalyst for talent, where the former, head of global business or head of BD from Gojek is now starting his own company. I'm just giving a random example, but like it's really building those talent, of helping them and showing them how to scale a company towards $1 billion valuation and above. And then they probably have interesting ideas, have a good education, a good knowledge, and go ahead and do it themselves again, which then provides a great support for the ecosystem. I think from an investor point of view, as a key strategy, it's really about using a lot of technology also in your deal sourcing process, because you need to be faster. You need to look at more places. It's not just Silicon Valley anymore. It's not just Singapore anymore, where great companies are coming above. It's really about building those networks, building these connections. And for example, we build a corporate and the expert network where we have a lot of people who we work very hands-on and close with to find deals in every corner of the world. And that's been helping us to find extremely interesting companies, and hopefully we'll be moving forward. Quickly, blockchain Southeast Asia, just because you're a blockchain fund, and I think it's just been so hot these days, and a lot of venture capital funds and a lot of founders are now going into that space. I think obviously from a transaction and payment perspective, it's very interesting, just because you have a lot of international remittance. You have a lot of people who are sending money from A to B, from Singapore to the Philippines and back. Digital identity, authentication, and security is becoming very interesting also from a governance perspective, government perspective, as in Singapore, for example, with SingPass and all these things. Even degrees are now on a blockchain. For example, NUS and SMU in Singapore are now offering the degrees on the blockchain. And then you have the whole social network and gaming, social mining, play to earn, where people actually generate real money by doing what they like to do, or consider fun. From an infrastructure perspective, I think it gets a lot more sophisticated. I mentioned Bakong in Cambodia. Similar arrangements have been done in Thailand or in Indonesia. Of course, Singapore has been on the forefront of that as well, with very good regulations to offer such companies and a home in Singapore. DeFi it's early for sure. There are more exchanges coming up. Especially trading solutions here in Singapore have been interesting, but it's coming. And I think first of all we need to build infrastructures and open up, because there's so much demand and need, especially in the crypto space here in Southeast Asia, that there will be a very hot market moving forward. What's now driving the VC space here? I think it's essentially 6 points. The first one is really tech-driven deal sourcing. Right? To use machine learning, use artificial intelligence in your due diligence process. Great examples, actually in Germany and the US, is Early Bird Venture Capital. They're doing fantastic in that space. Bloomberg Beta with their Future Founder program. We're actually predicting who might be a founder, which in my opinion reduces a big problem, because the way we've been sourcing deals in VC was, in my opinion, based on a lot of bias as well and screening, right? Because the partners have a network. Typically, you reach out, there's only certain deal flow you will receive, and some other founders who might not have access to that type of prepared people, they're basically been left out. And I think, of course, machine learning and artificial intelligence is not perfect in terms of bias, but I think they definitely support moving forward. One of the most interesting things is, and I think that's sort of what makes everything even more complicated and better at the same time, is that you have the democratization of information. Right? Before, you needed to go to a specific place, like a library, to get your information, right? Or you need to get an event to go and understand. But now you have LinkedIn, right? You have TechCrunch, you have AngelList, you have Crunchbase, right? You have all these resources where information is essentially available, right? It's just about how to categorize, organize it, and then use it to your advantage in terms of both from a founder perspective and, of course, from an investor perspective as well. You see a lot more localization of funds. You see a lot more smart money being pumped in the market, or hands-on money, as I call it, because if you're a great startup currently, you don't have a problem getting exposure to the venture capital world. There's a lot of money in the market. I mean, yes, it's not perfectly distributed yet, and most of the funding goes into the later stage rounds of already good performing late stage startups. But it's still there's a lot of funds coming in, especially Southeast Asia. A lot of US funds are coming in and really building up their offices and their standpoint here, because they know that it's going to be an interesting market moving forward, an already interesting market. There'll be a lot of true innovation coming out of here, no more copycats. As sort of you've seen the Chinese revolution here in Southeast Asia, everything which kind of blew up in China was then rebuilt here in Southeast Asia, and it worked. But now you actually have things which are coming out of Southeast Asia, which is a true innovation profile. Founders have become more local. You're going to have more first generation local successful founders rather than only foreigners or people who have lived abroad and studied there and came back with an interesting idea. For example, Grab and Gojek were both the same case. And you will see alternative ways of actually raising money, right? You have crowdfunding, you will have the whole tokenization point of view, and you have SPACs, right? Which helps you to go public earlier and just bring more liquidity into the market, hopefully, because that's still something which we're lacking in that industry or in that part of the world. Now, moving a little bit away from the Southeast Asia side, I want to go into China just because it is definitely a bit of an interesting and a very different point. China has been, growing tremendously over the last years, and it will be transforming, or it also has on the agenda to be transforming into a technological powerhouse. And it's driven by 1.4 billion people, 33 trillion estimated total GDP. 70% is overpopulation. You have about 1 billion smartphone users. You have cheap data. You have a lot of 5G users in 2030, and that's actually pretty crazy in my opinion. You have almost everyone in the country using 5G, right? That's like literally in a couple of years from now. Average GDP per capita will increase tremendously as well, which will then have an effect on consumer spending, which will then increase the market even further. But one thing is to say, and I worked in China myself as a startup and as an investor, or with a startup as an investor, it is a very difficult market to tackle, especially for foreign companies, just because the market is extremely challenging. The expectations are very high. Consumers are very demanding, and the competition is extremely fierce. That's why you see a lot of companies, and there's big companies like eBay who never really tried to have an anchor. They never managed to have an anchor in China. And companies like Alibaba, Tencent, all the big ones essentially are taking over a huge part of the market, and Chinese customers are just using services and products very different than a Western part would do. What's driving essentially in China? It's technology, right? And I don't know who has been to China before, but I've never used cash, right? I only paid with WeChat and Alipay and all these payment apps, and everybody is doing it, right? And like you can go to any shop basically, and you will see all these QR codes hanging out, and people can use it, and people are using it. And that's bringing transparency in the market. I mean, and it also, really shifts this country to a mobile first generation. And if you don't have a mobile phone in China, you can almost not participate in the economy anymore if you want to put it in a very, very harsh scale. But there's also a bunch of other stuff which is happening on the semiconductor side, which I think is very interesting to mention. It's because we never talk about hardware companies, right? I mean, and most of the focus is on software businesses, but for every chip you do, for every device you make, you essentially need semiconductors. And the US is leading in that market. But China has a tremendous appetite for these products in order to produce technology, in order to give 1 billion people devices across China. And of course, with more discretionary income, people will consume more devices and will consume more data, and will be more exposed to mobile and internet. And that's what China is heading to, of really becoming a leader in that space. It's already a cashless society. I mentioned that. I mean, a lot of people are in middle class, and you have a lot of companies who are become tremendous big and looking to invest and buy assets outside of China to really bring that vision. And I think China's government is doing a good job in that regard of really you know, moving that tech reform forward. Key drivers, again, just quickly highlight a couple of things. There's a couple of key industries. So of course, artificial intelligence is something China has always been investing highly in it, and then moving forward, the same as robotics and self-driving cars, and all these things are just blowing up. In media, even the film market, China has done a tremendous job on competing in that way as well, to making sophisticated movies, which are now ending up in Western movie theaters. There's a lot of startups also happening in that space. The whole social commerce, which in my opinion is extremely interesting, just because there's so much happening. If you look at like Pinduoduo, for example, or like all these other platforms, there's so much power behind all these users who share opinions, who share updates about what's happening, what products to buy, what products not to buy. And it's very, very easy to actually ruin your reputation, right, as a product, because you have so much exposure and you're so transparent in terms of how people write about you and talk about you. So keeping that relationship with your customer, focusing on customer, being customer oriented, and just like keep up with like this fast moving, ever responding sort of movement is something which is fascinating. And it gives a whole lot of power and a whole different place of marketing, which makes challenging to go in these traditional marketing rounds for big conglomerates moving forward. 5G is ahead, and of course, smartphones capability expand. Consumption is getting higher. I think I mentioned this before. And what I really want to emphasize, and I think I saw that also like in Japan, for example, and I think it's growing in Southeast Asia. Singapore is in a similar stage, in my opinion, that very consumer-oriented penetration strategy. We talked to a lot of companies who want to tap into China, or startups who want to tap into China and look at the market, obviously because it is a fascinating market. It's a huge market, and one of the biggest markets in the world, but it's just so hard to enter because you need to have you need to understand the consumer very, very well in China and still be able to compete with a massive sort of more or less isolated economy, in a sense where most of the businesses are just penetrating China alone because the market is big enough to do that. Right? In Singapore, you can't. It's because the market only has 5 million people. It's hard to become a unicorn within Singapore. You need to expand to other markets and other cities. But China, you can easily become a unicorn if you capture a small fraction of a 1.4 billion people market, who essentially all going to have a phone in a couple of years from now. Key trends to watch, in my opinion, is definitely from a logistic perspective and a supply chain perspective, and kind of like driving globalization. There's already a lot of trade coming in with the One Belt, One Road initiative that will even increase. China is focusing on a lot of better environmental protection, greenhouse startups in the green, sort of zero emission space are growing up. Same as energy vehicles, self-driving cars, all these things. And yeah, I think that's going to be the direction moving forward. And I think it's already been progressing quite fast. I think blockchain in China is an interesting topic as well. I mean, just one thing, blockchain and crypto, obviously, I mean, everybody who speaks about crypto means blockchain, everyone says blockchain means crypto, but essentially these are like two different things. I mean, not necessarily, but part of each other. You can have a blockchain, but not a crypto component. And especially in the B2B space, where when you just look at the core, what the blockchain essentially does is in terms of effectiveness, ease, like replacing middleman, making things more transparent. From a trust perspective, there's a lot of areas you can tap into when you have a blockchain component, right? You can look in banking, of course. You can look at in governmental services, agriculture, healthcare, digital identity. And China is really driving the blockchain adoption across 18 verticals, 108 scenarios, right? I mean, it really, I saw a recent interesting article. They say it's the age of blockchain 3.0, where you go from very limited application points to actually having an application in almost every industry. When you have a supply chain, obviously in trade finance, a lot of tracing, asset attestation, you have peer-to-peer energy trading, where you just want to have faster and smoother processes where record is being made, which can't be tampered with. And there's a lot of, essentially it's solving human trust issues, as we call it, right? And I think that's where blockchain is going to find its use case. And and I think that's where China's doing a great job. And they have a few points about crypto as well. But yeah, I mean, we'll see how the future plays out here in the China region, or mainland China. China development and emerging technology, just to round this up. Yeah, you see a lot of big data and artificial intelligence coming up. They want to become the world's primary AI innovation center by 2030. So a lot of capital is going in, a lot of startups being funded in that area. Yeah, I mentioned semiconductors briefly before. China imports upwards of $300 billion worth of semiconductors every year. But yeah, they want to fill the domestic need. They want to fund more companies in there. So startups, obviously, in that region are doing quite well. Communication equipment, domestic market, 1 billion internet users. Everybody is communicating basically on a consistent basis. And software, where still B2B software SaaS has been a bit slow. There's still room for growth. That Chinese companies embrace the latest technology. And I'm not talking about Alibaba and Tencent, but I'm talking about all the other companies who are doing a lot of business in China from a construction perspective, where obviously a lot more technology could go into them to just be much more faster, much more agile, and cut costs, and just really adopt to that change. As sort of a last point I want to quickly mention is, what is the important factors for early stage investing, right? And now we've seen a lot of developments in Southeast Asia and China, where it's obviously on different waves, I would say, but it's still very interesting to look at that. And moving forward, this will even accelerate, right? More money will come into the market, more technology will be used and will be demanded, and more dollars will fall into that category. So what is happening now? I think from a founder perspective, it's all about managing the change, right? And we've seen this in COVID. I mean, most of the most successful startups, they either didn't adopt to COVID, or they were super fast in adopting to the COVID. Otherwise, you probably had challenges in terms of fundraising, needed to raise bridge rounds, or even maybe didn't make it through the pandemic. And I think England Tan from Insignia Venture Partners out of Singapore said that in a very nice way. It's not the strongest or the most intelligent who will survive. It's essentially those who can best manage change. And I think moving forward, we should all have a long-term view, and especially if you invest in blockchain, in like all these emerging technologies where there's still room to growth, both from a regulatory perspective, but also from a pure product perspective. It's about looking at the fundamentals of what the startup is solving, having that long-term view, being supportive as an investor, and as a startup, look for these supporting investors who can add more to your cap table than pure allocation of financial resources. And just being lean and agile, I think, and we've seen this with office spaces becoming redundant because people work from home over a lot of different devices, and that helps startups, right? Because you don't need to be in Singapore anymore, you don't need to be in Silicon Valley anymore, you don't need to be in Shanghai anymore. You can basically operate from everywhere, just using a lot of different technology providers and service providers to enable you to stay on a contact communication, which also increases the pressure, right? Because you're now working 24/7, you're working literally every day, because if your team is everywhere, and if you're everywhere and you have access to all the resources, that sort of falls in a very different category of work, in my opinion, which offers a lot of doors, but also makes things more pressurized and just more challenging. But it's always a pro and con. And I think that sort of summarizes it, the point that I'm trying to make. And all in all, I'm extremely bullish about that part of the world. I think we will see a lot of growth moving forward. Yeah, I'm excited to just meet a lot more founders and investors in that space and discuss about interesting trends. That was just a short overview of about China and the Southeast Asia space, and especially early stage investing. Of course, there's a lot more to add to that. But yeah, especially those markets I mentioned, like the Philippines, Vietnam, Indonesia, but also China. I think there's a lot of growth potential moving forward in different areas and different categories. But it will be one of the most impressive and fast-growing markets moving forward, enable a lot of growth and a lot of money being made in those markets for both founders and investors. Happy to reach out to at my email, toby@blockchainff.com. On LinkedIn, you can find me on Tobias Bauer, my normal name. I'm also on Twitter and any other platform basically as well. So yeah, thank you so much for listening. It was a pleasure. Thank you for having me. And if you have any questions, want to get in touch, feel free to ping me on one of these channels, and I'm happy to have a discussion or see if there's a way we can collaborate. So yeah, appreciate it, and thank you so much.
Many thanks to Tobias for providing a comprehensive overview of tech markets and tips to attract VCs. Now it's time for our third speaker, Sabrina Wang. Sabrina is the founder of Startup Yard, a pre-accelerator bootcamp designed to help new founders to launch their startups globally. Sabrina is also a community builder within the Chinese ecosystem as a co-director at Startup Green Beijing. Today, she will share with us the fundamentals to set up a startup in China, as well as integrating it within the local ecosystem. Let's listen.
So, hi everyone, my name is Sabrina, and I'm gonna talk about the startup fundamentals today and the importance of the local ecosystem. But first of all, I would like to introduce myself a little bit more. Who am I and what is my background? So as mentioned, my name is Sabrina Wang. I am a community builder at first, then I'm also a founder of a pre-accelerator bootcamp. I'm also an MBA candidate, almost graduating. And I'm also a silly butterfly. That just shows how, how playful people should still be, no matter the age or anything. So I'm a very strong believer of creating your own opportunity. So no matter where you are, what you do, you can always change certain destinies and always take opportunity in your hand. Today I'm not going to talk too much about myself. I'm going to talk about the fundamentals of a startup, especially from a China perspective. So I'm going to talk more about setting up a company. And often I get to ask, how do I register my startup in China? And what is the process? So simply the process looks like this. So the most common entity type of foreign entrepreneurs are wholly foreign-owned entrepreneur enterprises. So there's also called WOFE. And there are also other types of entities that you can register your company to. That is just the most common one. And then what you will approximately need are like 2 months for registration process and around 10,000 RMB. And the registration process will look like this. So you will be able to register your business name also online since March this year. Then you will get a business license. With this business license, you can issue certain fapiaos, meaning certain bills and everything to cover your costs. And then also a corporate bank account. So with this, you can get then a corporate bank account. So those are those very generic in a very overview way how to register your company in China. Other things that you can actually do is maybe talk to certain agencies. What I've seen also often happens in China are very supportive incubators. They're often government owned, and then they will support you with the registration process and can also help you with a visa. So in China, especially if you don't have a visa, or like it's very hard for you to stay here, so or basically impossible. So a visa, if you have your own startup in China, is the entrepreneurship visa that fits to you, and you would get it and you can actually extend it for 1 year. So in total, you have a visa duration of 2 years for your startup. I would actually like to talk a little bit about entering a new market or a new ecosystem. And this is more specific to China. So let's say you're a startup and you're thinking about entering Chinese market, or more specifically, you basically are entering a new ecosystem. So maybe you have, a good network in, let's say, Germany, but you're now in China and things might work a little bit different, or maybe there are other key players in that ecosystem. So who are the key players in the ecosystem in China? So as I have also come here with my startup, and we're looking for supporters, the key player in the ecosystem. I can share from my perspective who are the key players here and who you can get closer to, who will give you the necessary support. So there are universities. So as I am doing my MBA at Peking University, I've known that the university itself also has certain incubators, or like they support you if you're a startup, and they will give you certain resources, mentors, or other things to give you like a kickoff start. So those are universities. Sometimes they even invest in your university. They probably come also from more on a angel investor perspective. So maybe sometimes there are professors. I've heard about those cases in China too, where certain professors were very keen about you and your startup, and they started investing in you. Then there are accelerators and venture capitals who will offer you certain programs. Usually they are like 3 to 6 months, and then they're trying to help you to accelerate your startup. So, but this, and then they will eventually invest in your startup. So one of the most well-known here in China are China Accelerator and some other venture capitalists, SOSV. And so those are the ones that are very well known here in China. And yeah, they can definitely invest in you and give you the necessary support and resources and also knowledge. However, to enter those accelerators, you will need to be more matured. So you will already have to found product market fit. And then of course you have government support. So what government will do, there are certain funds that they have so that they can help you finance. They're often organized cyber competition by the government. So in China, there's this most common misunderstanding about the ecosystem in China is that they don't have anything supportive or resources for international startups, which is very, very wrong. Maybe now during COVID times, it's a little bit hard to actually bring your startup here to China, but they're still strongly investing into more matured startups, also if they're international, and governments are very welcoming international startups. Then you have incubators and corporates. So you have sometimes, I think maybe you know them like Daimler, Mercedes, and other big brand corporates that also have an internal incubator to grow startups or use certain startup methodologies to improve their product launch. So that also happens, and sometimes the corporates are very interested in certain, let's say the automotive corporate, they is very interested in automotive startups. So that one you can also look into. And last but not least, I want to talk about communities and nonprofit organizations. I would say my strongest personal connection are with communities and nonprofit organizations, because not only do you enter a community that is helping you for free, but also you'll find friends, and those friends can open more doors for you and help you to get into accelerators, connect you with venture capitals, refer you to governmental organizations and other funds, and of course incubators too. So I would like to dig a little bit deeper into communities and nonprofit organization. As my background myself, I'm also co-director of Startup Grind, but I do want to tell you that when I started to come to China, and I'm living in Beijing, and when I came here, I did not know about anything about the ecosystem. So for me personally, it helped me a lot to join the Startup Grind's events, where they share a lot about what they're doing. They're very proactive in holding events, supporting startups for no money in return, basically, but because they're passionate about startups and they genuinely want to help them. They often organize certain workshops or events or promotional actions for startups. So that's why I'd like to share a little bit about Startup Grind in China, as Startup Grind itself is the world's largest startup community. You can check, they're all over the world. You can check online a lot about them. Startup Grind in Beijing, we have had over 5,000 attendees, over 130 plus by now events. Why am I talking about Startup Grind? Is basically that if you're a community, if you're a startup and you want to enter any kind of ecosystem, let's say the Chinese one, but maybe also the German one, or the one or someone in the US, you can find their own chapter in your ecosystem. So because Startup Grind is so widespread, they have chapters around 600 in 125 plus countries, and reach out to them because they're usually very responsive and will be happy to actually help you. And yeah, I can just tell you that every entrepreneur needs a certain community to support, because here you can share failure, success stories, you can exchange resources, you can find mentors, you can build connections, and you can find like-minded people. So this is my sharing for today. Thank you very much, Sinofy, for inviting me. If you're interested in knowing more about the Chinese ecosystem, I'm happy to share more details with you. If you want to be connected to certain resources in China or certain other organizations that might help your startup, I'm happy to also support you here, not only by Startup Grind, but also my own venture Startup Yard. And just as a person myself too, I'm a volunteer, so I'm always happy to help founders, and I'm happy if you can just add me or anything, and then we can follow up the chat later. So thank you and see you soon, hopefully.
Thank you, Sabrina, for your piece of advice. We are now ready to welcome our first guest speaker, Jean-Yves Laguillet. Jean-Yves is the co-founder and CEO of Emotion Digital, a marketing agency which helps Western brands enter and develop into China through digital marketing solutions on Chinese platforms. Jean-Yves, the stage is all yours.
Hello, everybody. I'm quite happy to join this Innovation 2022 conference. I am Jean-Yves Laguillet, and I'm going to talk about digital marketing for China market. First, I would like to introduce myself a little bit. So if I was using a few words to define myself, I have a very high passion for China and its culture, and about business development. I have been working for 10 years in China, living in Beijing. First, when I arrived in China, I was an industrial director for a big international company. And I was integrating some new factories, new company, just bought a few months before. Then I grew in China, taking over the HR function, then the business, and become the general manager for China, later on Asia market. So I have been developing new brands, new products, and grow the businesses in China. Then during my leisure time, during my free time, I was helping as well some friends, some people to grow their new business, Westerners coming to China. And finally, I decided myself, why not doing this as my new job? And together with my co-founder, we have take over a Chinese company, a digital marketing and Chinese company, and we create Emotion Digital. And I'm now the CEO and co-founder of Emotion Digital, helping Western brands to develop into China through digital marketing. So about my presentation. So first, it's very important to understand what are the specificities of the Chinese market, to understand why social media are so key in entry or in a growth strategy, relationships and market education, two very important items to do business in China. And then I will finish with a few tips to succeed in China. Let's start. So what are the specificities of China market? If you don't know so much about China, you will think that Chinese market can be very confusing. And in fact, I remember when I arrived in China many years ago, it was my first impression. So confusing. And during 6 months, it has been very hard. So then I try to understand step by step. And I want today to let's make it simple. First, China is unique, and it's a digital mobile country. To succeed in China, you must have a Chinese approach. Your Western social media strategy or your Western business strategy will not work in China, because you need to understand the Chinese people, you need to understand the culture, you need to adapt to the different ways of doing business, of doing marketing in China. China is a digital and mobile country where you can do everything on mobile, especially on the main app called WeChat or Weixin. People use digital platforms to keep their business running, manage customer relations, order anything. It can be food, it can be a ticket, it can be even doing payments and so on. You can enter China market with a digital mobile approach. So this is very good because China is a digital country. Then it's enabled for any foreign business not located in China, in fact, to start doing business with China using digital. So you can do it without setting up a company in China. And if you want to start doing e-commerce, you can do it in a cross-border mode, which is a good way to start from test the market and to do the first step of business. So China has a unique digital environment in terms of platforms. Very specific e-commerce platforms as well. You know the importance of live streaming, which is a very important trend for doing business, especially in consumer market. But we start seeing as well industry doing live streaming. And Chinese Chinese people have a different customer habits. So China is very unique, and it's very important to keep this in mind because your Western strategy cannot work. You need to know as well that today the mobile commerce represents 80% of e-commerce in China. And Chinese e-commerce represents more than half of total sales in China. So the good news for business in that technology is making it easy to trade overseas, especially with China, which is leading the way in retail and payments, creating a rich online experiences to drive customer engagement and sales. China is distinctly digital market with mobile and social playing a key role in marketing and success. Digital is not just one possible option, is really the key asset of your future market. Second point that I want to insist on is that China is becoming mature and is in fact under big transformation. Maybe it's not so visible from a Western point of view, but for is really under big transformation, and I believe that year after year we are going to see it more and more. So it's rotating from a rapid growth model, and the growth a few years ago was more than 10%, now around 5 to 6%. So rotating to a rapid growth model to a more mature one with less leverage, less industrial, less dependence on cheap labor, and has a strong focus on technological innovation. Last year, in 2021, a lot of change and events have occurred in China. Most of them were perceived negatively, in fact, in Europe or in the West. Many crackdowns. I remember the one on, for instance, on education. Some policies shifts, a lot of turmoil about real estate, about Evergrande. Some threats about the listing of Chinese company from US. In fact, China is becoming mature and wants to correct the excess that need to be regulated. Example, recently, about the cleanup of the internet, like on Weibo, or the end of last year, the protection law for personal data. In fact, this is already existing in Europe, but in China, it was not existing, and it has been set up last year and become compulsory to comply in China, even for foreign company based in China, when you do business with China. So the reshaping plan of the China government is called the Common Prosperity. The purpose is really to build a wealthy middle class with a sustainable growth. So maybe today we see only the foundation. They are building the foundation to clean up, to put more regulations with the purpose to avoid past excesses and to make the growth more sustainable and more able to grow a wealthy middle class, which is very good, in fact, on the long term. So all what that means as well, because of lots of change happen. Sometimes you have a very short time to comply with the changes. So you need to be very agile in China in order to succeed. To say a few words about Chinese consumers. So they are very different from the West. I would say they are very demanding, especially on services, quite sophisticated, and proud about their country, so they pay a lot of attention to cultural elements. First, Chinese consumers are buying brands. So building brand and brand awareness in China should be the top priority for any new company entering in China. Chinese consumers are very demanding in terms of service, and I want really to insist on this, because they expect a very quick reply, 7 days a week, 24 hours a day, from a brand. Many Western companies fail due to poor customer service. So it's a very important point to think when a company, as well in technology, as well in consumer market, want to enter China market. As well, Chinese consumers are quite demanding in terms of aesthetics, such as packaging. I would say as well that female consumers are by far the main consumers in China. I think it's around 60 to 70%. So it's quite really the main consumer. And with a higher disposable income than ever before, they are investing in self-improvement and crafting their own public image. And finally, the importance of cultural elements is high for Chinese consumers. Also to notice, especially in the last, I would say 2-3 years, the rise of national pride, which put pressure, in fact, on foreign brands, because the local brands are more and more strong. They are growing, and this put pressure for sure on foreign brands. So what does it mean for Western marketers? They should pay more attention to design an offer very specific for the Chinese market to meet customer needs and bring them the right and expected value for money as a foreign brand. For sure, the Chinese consumers will expect something different from the local brands. You need to bring really value for the money that you ask to the Chinese consumer. Doing business in China is as well expensive. So sometimes many Western companies think, China is a cheap country. It should cost less to develop in China, but it's not true at all. In fact, China is more expensive. And because as well it's expensive, it needs a long-term approach. So why is it expensive? First of all, just because doing business in China is more expensive than in US. For many, for business, to create business relationships, to set up a business, to start selling on e-commerce, or to sell through distributors, it's just more expensive than in the West. The competition, why as well? Because the competition is so fierce. China is a very competitive market, which means that you must have an unfair advantage to succeed. You need to build your brand awareness in China market. This takes time. It's an investment. You need really to invest a lot of money, in fact, to get it, because you need to be visible on several platforms in China. So, I mean, several online platforms. Chinese consumers are very demanding in terms of services, as I mentioned previously. And you need to have a multi-channel approach to get credibility. Just to mention here, so a lot of social media are existing in China, and according to your audience, according to your market, you need to be visible on several platforms according to your audience, which makes the cost higher. So because it's expensive, of course, you need to plan everything and to have a long-term approach. Long term means several years. You cannot just to get the brand awareness. It will take at minimum, I would say, 6 months to 1 or 2 years, depending on your product, depending on your market. But at the end, even if it's expensive, I would say it's for sure worth it. When you do it the right way, you will get a good payback. So for sure, it's worth and exciting and to develop your business in China. Now I will just give a very short overview about social media, because social media are really key in entry and growth strategy. Either you are in B2B, either you are in B2C. It's about the same, in fact, in China. You must be visible on social media. So in my title, I say social media are key in China. In fact, they are more than key. They are the key to enter and develop in China market, because more than 1 billion Chinese are online, and China social media users are far more active than in other countries. They have a lot of impact on buying decisions of Chinese consumers. Much more impact than any other countries in the West. It is very different in China. Maybe it's similar now, it becomes similar a bit in Southeast Asia, but really China is a main country like this with a so strong importance of social media. If a Chinese consumer sees a product being discussed positively on the social media, especially by a friend or acquaintance, they are far more likely to actually purchase the product than in his or her counterpart in other countries. Peer recommendations have a huge influence on Chinese culture, as the formal institutions are less likely to be trusted. I would say that China has taken influencer marketing already to a new level. Probably you have heard about KOL and key opinion leaders or key opinion consumers. This is very important to know when we are doing marketing in China. You need to use influencers to make your business more visible and to succeed. So, in summary, as your target audience for sure is on social media, either from the B2B, either on the B2C, you have to be there. You need to be visible. So what are the main Chinese social media platforms? So there are many, for sure. I will just mention a few of them. So you have WeChat. So WeChat is the most powerful app where you can do everything in your personal life and work life. More than 1.2 billion monthly active users. On WeChat, you can do payments, you can chat with your friends, with your colleagues, with your suppliers, with your customers, of course. You can do e-commerce as a company. As well, inside WeChat, there is what we call mini programs, and it's a kind of Apple Store built inside WeChat, which is very powerful for doing business. The other app is Douyin. So Douyin is called TikTok in the West, but in fact it's very different. Douyin in China has much more functionalities, very powerful e-commerce functions, but more than 700 million monthly active users. And it is, like in the West, the biggest short videos and live streaming app. You have Weibo. Weibo is a kind of Chinese Twitter. So Weibo is to discuss hot topics. And in fact, it's good for brands to develop awareness as it is open app, which is not the case for WeChat, which is a closed app. You have Xiaohongshu, Little Red Book in English, so it's a kind of mix between Pinterest and Instagram. Opportunities for brands, mainly for lifestyle or fashion or cosmetics. So it's a content sharing platform. And you have Baidu. Baidu is a kind of Google of China's search engine. You have as well the more recent platform, Bilibili, which is a long format video app. So but maybe the most growing one at the moment. Very popular for young, educated people. And it's a very good platform to use when you are in a tech business or when you are in the education business. It's a very good one where you need to be there. And I will finally mention Zhihu. Zhihu is a kind of Quora of China. Very good platform as well to create your visibility, to create your brand awareness. They have developed as well some e-commerce functionalities. What you need to know as well, and this is different from the West, social media and e-commerce are very interconnected. So China mobile ecosystem is integrated. User journey in China happens in mobile ecosystem that seamlessly integrate the three main pillars of digital. So the social part, the e-commerce part, and the search content, the search engine part. So all of these functions are integrated in most of each social media platform, which doesn't exist really in the West. So because of this, social commerce is everywhere. It's developing very fast in China. And the penetration of social media, such as WeChat, Douyin, or live streaming, has helped to transform consumption into entertainment. Consumers are used to buying directly while browsing social networks. So shopping in China, buying in China is really entertainment and a social experience. So experience is really as well a keyword to remember. China consumers go online to see what is new, what is trending, and do not hesitate to spend long time because it is entertainment. So in the West, it's different. Consumers go online to search a specific product, expect a fast and smooth shopping journey. In China, they enjoy it. So Chinese social media are really the key in entry or scale-up strategy. Of course, you need to, depending on your market and your product, you need a fully customized strategy, as well according to your target audience. Where is it in China? The geographical area, because you cannot have the same strategy if you're targeting young people in big cities, if you're targeting older citizens in countryside. So for sure, you need to have a different strategy. Keep in mind that China is like a continent. It's not. It's very big with different provinces, different areas. With the social networks, So you will get information about your audience and your competitors' actions, especially at the beginning and before entering China. You can prospect, attract new customers and partners. You can develop your brand awareness. Of course, you will generate traffic to your e-commerce platform. You will promote your sales, convert followers into customers, build a loyalty. WeChat is very good at this, to build a loyalty with your targeting audience. And it's ready for B2B or B2C. There is no big difference between B2B and B2C in China regarding social media. If you are not there, you don't exist in China. So just a few words about relationships and market education. So as you know, China is a relationship country and is very central for doing business. Face-to-face are very important in Chinese culture to do business. But these days it happens a lot online, especially on WeChat, which is the main place where business got done, especially after closing of LinkedIn end of last year. So WeChat is even more important now to be there, to be visible on WeChat. It's really the main channel to foster existing relationships. On WeChat or other social media, it's important to engage followers as well in a group chat, to build a community. Really, it's a way to develop your business in China through community building. Educate your followers about your product and services. So, what is education of the market? So education of the market, I really believe it because I've practiced it a lot in China when I was leading a business. It's very important to bring, especially when you bring a new offer to China, and to make understood the value of your products. In B2B, of course, usually you do it in fairs or you do it during seminars, but digital channels have become also a powerful way to educate the market. Besides the WeChat, there is another platform I mentioned, Zhou, the Chinese core. It's a very strong one, very good one, and to educate an audience looking to improve their professional knowledge. So on Zhou, you will raise your brand awareness, demonstrate your brand, your authority in your field by answering questions, writing and posting articles. Building trust through third-party mentions. It can be done as well on Bilibili, especially if you are in a tech business and looking for a young audience. Education of the market is really a key step in succeeding in your development in China. Then I would like to end with a few tips. So what are the secrets of successful foreign brands in China? So be a Chinese in China, very important to remember. Be Chinese in China without losing, of course, your brand essence, maintaining your brand values. Localization is very important. You need a Chinese name. If you don't have a very famous worldwide brand, you need the Chinese people to remember your name. You need to design your offer for the Chinese market. You need to be visible on the Chinese social media. Second tip, you need to be online on the Chinese platforms, selecting carefully the right ones for each step for your target audience. You need to deliver outstanding customer service. Be ready for long-term approach. China is not cheap at all. And remember the importance of influencer marketing. And finally, in China, really, it's something I have learned over years. Forget logic, go with the flow, adapt, be agile, while keeping your big picture. And I will finish to say that having a good partner is essential to your success in China, especially if you just start in China, because China is a unique country, it's different. So you need a partner to help you. Thank you very much to listen to this presentation. Just to finish with a few words about my company, Emotion Digital, helping companies to increase their visibility and sell in China. So we are based in Shanghai, as well in Paris, where I am now. So we are experts in the digital marketing only for the Chinese market. Our website, we have as well a newsletter on a weekly basis. And of course, you can contact us at contact@emotiondigital.agency. Thank you very much and have a great success for your development in China. Bye-bye.
Thank you, Jean-Yves, for sharing your knowledge on Chinese digital marketing. I think it was very insightful. We are now ready to announce our last but not least speaker of today, Lingyi Kong. Lingyi is a vice president at Execution. With a special focus on the fintech sector, today she will share with us about the work dynamics of foreign capital business in China, the struggles that arise when recruiting, different cultural understanding of the process, and much more. Her presentation will be very useful for post-investment stage founders and executives. So let's listen.
Hello, everyone. My name is Lingyi Kong. I'm working in London as an executive search consultant within the financial market across Europe and Asia. And I'm really happy to be able to participate in this event and talk about the recruitment situations within fintech industry across China. I would like to share a bit more idea with you and hopefully can be helpful for any business expansions towards Chinese markets in the long run. Okay, let's start with this. In order to help those who are looking into recruitment perspective, I would like to go into a bit more current situations in general, and I did a little bit of study about the situation, not just based on my case, but in a bit of interview of my networks and a little research on the wider discussions about the recruitment situation across fintech. Obviously, fintech in China is a big area for the next decades, and especially for when you're talking about the Bay Area setup. How the Chinese government is looking over the Hong Kong's position for the next stage. Technology is going to be a core element to make sure that Hong Kong is well engaged across the market and to be able to create a very solid access for foreign capitals to get into Chinese market or for the Chinese domestic brands to go overseas easily. I think Hong Kong is changing its characters a bit more towards from financial services hub over to a technology and creative center. By saying that, I would like to talk about recruitment in terms of when business leaders are trying to set up their startup firms across Chinese mainland or Bay Area. So what you need to think about. The first recruitment element that for a lot of business founders I would suggest is to do a good study on location. So location on itself, it contains a lot of elements. First of all, it's most straightforward is what type of business, depends on what type of business you are. Most of the businesses that actually have their company set up in Beijing, Bay Area, Shanghai, are pretty much those who are in high demand of capital injection in their pipelines. Because those companies or those cities are actually providing a very solid capital flow, and you can easily find investors, you can easily find other funds or corporates or large institutions who are willing to step into the tech space. And Beijing is more closer to major regulatory players. If the business is aiming more towards institutional clients or high tech guru, a very top tier sort of high-end research backed entities, that a lot of company will decide to set up their office in Beijing. In general, I think Beijing it's also very, very easy to find tech gurus in a way, because the university is providing solid communities and graduates, and it's easy to cultivate, it's easy to train, find people who have already trained in high quality educational backgrounds to start their career in Beijing. And the living cost in Beijing is fairly okay. I would say the living style in comparison to Shanghai, Beijing is probably going to be more domestic. The English language levels of most of my candidates based in Beijing are, I would say, are less competitive than Shanghai. And the living styles are going to be more family driven. So people tend to, who actually would prefer to stay in Beijing, are pretty much grown in the north of China, and they have a lot of families and communities and networks in Beijing, and also correlated to a lot of businesses, large corporations, banks, insurance, and major entities that who actually follow very closely with the step by government. So that is kind of the nature of Beijing, and in contrast, Shanghai is more international, more globalized, and the capital is more friendly. You will find funds that actually are pure dollar funds. You will find funds are dollar plus RMB. You will find funds that are pure RMB fund, but maybe backed by a lot of companies or high net worth individuals that who are seeking a very, very advanced technology boost. So those Shanghai will be a place that you can easily find information, understanding competitors in general of the industry. The information flow is more efficient, I would say. And so if your product or if your businesses are aiming towards more general use, more wider market applications, Shanghai, more commercialized utilizations, I think Shanghai is definitely a very good city to start your business with a lot of opportunities and a lot of talents to hire as well. And I think the downside for Shanghai is considerably the competitiveness. I think most of the startup company will face with the top tier talents. It's very crucial. A lot of firms would double their prices to hire the best people, and the one thing about rich capital is that most of the company are not worrying about paying enough for the good tech-backed gurus. So this can be a bit challenging for those who actually are thinking their capital raising capabilities not strong or not sustainable enough. And another tier one area is Bay Area, that recently has been picked up very heavily. And by saying that Bay Area in general contains people, by saying that is including Hong Kong, Macau, Shenzhen, Guangzhou, and Macau I think is the most easy one at this stage, because the nature of Macau is still very entertainment driven. You'd already find a lot of tech firms that actually setting up teams in Macau at this stage. Hong Kong is different, because from the government policy, Hong Kong is making the transition into a tech center to internationalize the tech center. So that is more like a channel for Chinese creative tech businesses going abroad, going to foreign capitalizations as well. Shenzhen somehow is more like the bridging area that for a lot of domestic players to be creative enough. And Guangzhou in the market is more on the trading, on the commodity, is aiming to become a mega international trading city, and then focusing on commodity, focusing on general trading products and commodity products that will deploy from Guangzhou to overseas markets. And Shenzhen is actually a very highlighted city that been attracting a lot of tech startup businesses, SME entrepreneurs to deliver or to actually have a very good range of business setup benefits, and to be able to let them thrive within within Shenzhen. And they have a certain certain community, or what they call it is Zhuhai industrial yard. They have within the yard that they would actually have a very tax-free business cycle, and they would attract a lot of graduates to set up their businesses as well. But somehow, if the business goes around for being successful, Shenzhen is one of the city that is also challenging in real estate pricing as well. Some of the area can be more expensive than Shanghai. So if businesses are going into a maturing stage, sometimes they will actually sort of considering pulling back from Shenzhen and relocate to other areas of China because the housing price is not applicable for everybody. And so by saying that, a lot of tier 2 cities actually came up, getting more attentions, and the Chinese government are actually putting a lot more efforts, or the domestic government are putting a lot more efforts to attract more startup businesses in the second tier cities. And that actually, by saying this, particularly including Chengdu, Jiangsu, Zhejiang, Fujian, and Chengdu is a city I would like to highlight because as the very advanced developing southwest city, that it takes a lot of benefit from Silk Road policies. And Chengdu is also a city that with very low living cost, a very flexible living style, and it's a city that started to go really attractive by a lot of what I call it very solid self-restoration capability companies, that they don't really need a lot of capital. They can actually self-drive revenues with a solid product or solid research plans. They would, a lot of more companies like this are considering set up their teams in Chengdu. There's a couple international startup founders I know that mentioned they actually relocate their companies to Chengdu in recent years. What they find, well, there's one of the typical example is there's a chip design company that the founder is American, and he mentioned that he really it's never easy to hire people in Chengdu in the first place, but actually it's very easy to find people, good quality people, and train them from the start to the mature stage. And then the situation is most of the foreign capital companies in Chengdu, they are very competitive in terms of pay and compensation package. A lot of them are a lot of domestic players in the same industry are not be able to afford the similar type of compensation. So whenever those companies are training people up and finding a very good, building a very strong team, and those teams based in Chengdu don't intend to leave because they just enjoy the style, they just enjoy the pay, they enjoy a lot of things that the company is offering. So I think from if the startup firm or the businesses are really looking into a very solid and content environment, Chengdu is a very good option to consider. And Jiangsu and Zhejiang on the contrast is a different perspective, because they are the areas that are surrounded a lot of Shanghai localized businesses, and also the major players in China on the e-commerce side. Alibaba, Jingdong, and basically Alibaba is the major tech startup incubators in those regions. So you will see a lot of players that actually getting into e-commerce related, and now the live e-commerce businesses are going around. So Alibaba and Douyin, TikTok is in a very serious competitive situations here, and Douyin is obviously succeeding from the technology space and the client or the market acquisition side as well. So TikTok is expanding business massively across the second-tier cities, including Chengdu. Actually, they're building a lot of business plans across the Chengdu, Chongqing area in the south as well. So Fujian, on the contrast, is on the other side, is a very interesting region that the government itself is putting a lot of efforts on attracting foreign capital businesses locally. The reason for that, it's potentially political, but also cost efficient. If people find it's very difficult to set up businesses in Shenzhen because of the cost, Fujian is always the second option that is not far from Shenzhen, and you will still have a lot of interesting projects and policy benefits and tax-free benefits within the province or the cities. So that's also can be an alternative option for some startup businesses. And on the other side, there's little extra names that I would like to mention that is also, you know, if foreign businesses are considering to bond or get into cooperation with local government, the local government boost on policy benefits, it's very strong within Chongqing and Xi'an, and all the South Coast cities that I named down here. Any business that who have a certain level of regulatory or clients or relevant business channels that within those cities are also can be an option for those smaller cities, and the living style, the cost, and the business opportunities over there are more domestic driven, more it can be, for example, Suzhou, it's very interesting place because the local government advised to set up a industrial business park that who are benefiting on the semiconducting, on the industrialized related businesses as well. So those kind of the smaller cities are constantly seeking their way to build up their expertise or industrialized professionalism communities within the startup businesses. So those are definitely worth to due diligence when you're actually, you know, interested in to step into those industries. Okay, so I'm going to talk about the next thing when we're talking about thinking about recruiting or working or selecting with my own clients or finding a way to understand my client perspective is the main thing is to understand their capital interest towards the technology or fintech space. I did a little research across the KPMG's fintech research towards Chinese markets, and we're experiencing very similar things on the trend side. The capital that are feeling more secure, the foreign capital especially, that feeling more secure to get access to Chinese market is based on 2B business in general, and where they can actually easily find access to add value globally, to actually realize a bit more revenue generating from domestic markets, you know, from a business angle. It's easy to find access to deploy dollars or to transfer dollars back to the market as well. So the 2B is still in a hot area, and especially when it goes to IPO stage for a lot of businesses that, for example, there's a fund that I used to work with in London who actually set up their Chinese desk back in 2019, and they would only invest into SaaS, 2B SaaS services companies in China that with about $1 billion ticket sizes in general, and that gives them a very clear screening processes during investment, accessing those businesses potentials, creating values by building up a strong business plans from domestic market and Chinese market and overseas market as well. So that gives them a very clear timeline of growing the business into a certain ticket size and then going to IPO or going exiting. So that is the general background or strategy for a lot of tech driven funds who are trying to get access into Chinese markets. And so digital solutions in general are very broad. Initially in China, it was all about payments, but now it's going to extend it into a wider service areas that especially towards like high quality service and life quality ideas as well. So a lot of healthcare regarded, a lot of financial management, wealth management side regarded products are growing massively, and those are the areas I think foreign capitals can easily find access or find client base in one thing. And the second thing is insurtech. It can be multiple. It doesn't really have to be in healthcare, but it can also be in finance. It can be property. It can be a lot of other things that to be able to utilize a very strong technology developing engineering team that to hire either globally or locally. This is another element that I would like to talk about in terms of hiring within those tech firms. The general hiring trend in Chinese fintech market can be split into two major perspectives. One is domestic hires, mainly to business startup businesses. It doesn't really matter. In most of cases, people are pretty much focusing on the skill set itself. And some firms are highly required to hire people that with global or international or very strong top tier academic background. That always draws over to machine learning and AI space, data managing space. A lot of computer science engineers that's studied in America, in top tier universities in America or in Europe, and they a lot of Chinese graduates like that are always seeking to come back to Chinese market. One thing is because the visa it's a big problem. So they find it's very difficult to find a job or find a company who can offer a visa solutions for graduates at this stage. Especially, I think US is in the lottery planning or lottery system. So it's not really guaranteed that you would have a job that you can actually sitting in the company for a long term. They're always an annual or 3 years lottery system, I think, and similar to UK, but UK is even more. It's not even optimistic. I think UK in general. I would always suggest my Chinese background candidates or Asia or anyone who needs visa sponsors for work to understand a bit more when you're speaking to HRs or headhunters, whether they offer visa sponsors or not, because that is a threshold for a lot of business, especially startup businesses. They tend not to offer visa. They don't have the budget, and the process is always tend to be very long and time consuming. So it's not feasible. So that pushes a lot of top talents to go back to the domestic Chinese market or Hong Kong or Singapore. So by saying that, the aim for those people who are actually going through the interview processes within domestic businesses are always split into two major sides. One is what we call it big factories, like Tencent, like ByteDance, like Alibaba, like similar type of business like Amazon and the other things as well. So the big factories are normally providing a very, very hardcore interview processes for graduates. Some of them can be 3 or 4 rounds, 4 or 5 rounds, and Alibaba will have a very hectic interview processes, from technical tests to personality tests and to what they call potentially like an IQ test as well. So there's a certain level of test structures that people need to have a lot of pre-study preparations before getting into the interview processes as well. So the selecting or the screening process for the big factories are very hardcore, and that leads to a lot of people who are not be able to get into those businesses. We'll have a lot more open window to consider local businesses as well. But global talents, I think they're sharing a lot of community and knowledge sharing, network sharing. So they would also aim to find, even for smaller startup businesses, they're always examining the employers who actually have a strong capital positions or a very strong founders who come from a very solid background. It's a lot of graduate hires actually is also an education processes that trying to understand, let the candidates understand what the business perspective is, and where they can actually have a more solid and sustainable career plan within the firm, either from product wise or from compensation wise. Where can they see the benefit and the growth in their earlier career stage? So a lot of startups, when we are working with startup big companies in China, my process is always very especially on the debriefing stage, that when we get to know our clients, when we get to understand their business a bit more, we would always going into a round of understanding their business stages, their product range, their client focusing, where are they going to go next, whether their hirings are actually very target driven in terms of developing new market, new client base, or it's going to be a very management or operational driven character that trying to maintain the business quality. It's going to be in a very detailed discussion, and we tend to work with businesses that have fairly strong capital positions at this stage. We tend not to work with startups that is just basically backed by a major corporates in China, or they're more like the corporate incubators, and they're like the babies of the corporates. We tend to find that sometimes those kind of businesses hiring is leaving a lot of questions in terms of culture, in terms of product range. It can be quite limited as well. So so by the nature of my client base, I think we tend to work with a lot of VC backed tech firms at this stage. And by saying that, AI and machine learning recruitment hiring, it's also very, very fascinating based on my experience, because the global hire that we're able to speak to top tier talents across the market internationally, and where we find the difficult side for those to attract global Chinese talents to go back to focusing on this market is I think that the risk, the challenge comes from two sides. One is the pay, very straightforward. How startup companies can compensate well enough for a MIT PhD, basically, who are actually running their own projects, data solutions with American companies, where they can get really solid funding. But when they are actually considering going back to Chinese market, the resources will be limited, and the company's nature will be not lucrative enough at the earlier stage. How we can find candidates to build a very entrepreneurial mindset with the company, grow with the company, share long-term benefits with the company is the key to sell this position, basically. And on the other side of the challenge is on the product range or the data, so-called data quality. A lot of AI and machine learning are pretty much rely on a very solid, large number of data collecting, whether this company are able to have access to a very solid data pool in domestic Chinese market, in their target market. That's one question. And what kind of service providers they can use, and what kind of quality product they can provide. And are those quality products going to be isolated in China, or they can share that from knowledge base from the global perspective as well? A lot of people will have a more global view on how to read this type of market, how to read machine learning technology, and they would like to get blended into the global trend rather than being isolated to the Chinese market itself. So that's where it brings conflict to some sensitive industries, like for example, like there's a particular portfolio company I work with that they work on the healthcare data solutions, and the company is basically headquartered outside of China, and that they're trying to get access into Chinese market. But before they agree to do that, they have to find government people, they have to find insurance, they have to find hospitals, they have to find local regulators to actually agreed on a piece of paper saying, okay, we're signing up this agreement. All the business we generate from China, the data we're gonna collect and operate in China, it's gonna be limited in Chinese market and not allowed to go abroad. So that, those kind of healthcare related or very highly sensitive, user experience data, user data, it can be very, very tightly located into Chinese domestic market. So any businesses who wants to get data related businesses into Chinese market, they have to do a lot of research, pre-research, or a lot of discussion and a lot of meetings, a lot of due diligence to understand what the local market look like. Where are the potential risks? Where are the regulation constraints? Where are potentially be the next stage if the data is able to get access to domestic market, or to link? What level of data can be linked over to international market? So those kind of research needs to be done before considering setting up those businesses, or when you blend it into your international business model, would that be the same situation, or do you need to change it, or kind of build a more domestic business model to apply for your market acquisition? So that is how I feel the hiring processes within those high tech firms are facing, that they're learning the market mostly throughout the hiring process with us as well, because they need to speak to local top tier management people, data manipulators, to understand what they really want, where the gap is, and how they can bridging it. So that is the general trend. And there's also, I listed a couple topics that on the digital asset side I would like to mention for the next period, or for the next decades, that for business startups or like startup founders or anyone who wants to sort of get in touch into digital asset space, that to look into those areas as well. So the currency, the crypto side, one thing, the crypto side, mainly dealing with the trading, dealing with the capital deployment, and by saying that, most of the service providers, most of the transaction related startup businesses who are deeply dived into blockchain technology or crypto digital asset technology are pretty much focusing on setting up businesses in Hong Kong or outside of China, even unless they're purely research driven or data service provider. They can probably do a little bit of a domestic business setup in China mainland. The regulation basically on the band is not transaction or not tradable, and anything that is to do with research, engineering, developing, it's all fine. So on the other topic, on the other topic is the CDBC side that I would like to mention. highlightly, but something that is worth to keep an eye out, because the Chinese government is seeking for building their own CDBC environment at the moment, and in the next 10 to 15 years, I think the scope, it can be very localized, and the information, the technology is also going to be very discrete, but fast developing. By saying that, all the related service providers in this area, either from CDBC or from digital asset or from blockchain itself, it would be a very interesting market to look out for, and to also potentially to find top-tier talent from as well. If anyone who are seeking for this kind of topic, we can actually find another time to go into it a bit deeper. Okay, I'm gonna move on to the next topic. Is when we're looking into the regulation side on the recruitment, that is it's pretty much focusing on the core government related or government monitored in recent years. Not talking about the educational side that everybody knows now. It's on the technology space, data space that I mentioned from my previous example. On the healthcare data protection side, healthcare is one of the biggest topic for Chinese government, especially the COVID actually paced it up about trying to let the centralized or the government people understand, from a more for psychology, from more kind of mental health perspective. All those data is in a very early stage within Chinese market. So those kind of businesses are fastly growing, and the Chinese government is trying to build a very solid information or service pool across all those very niche and very raw and undeveloped topic, but it can be very, very interesting. It can be very supportive by the regulation as well. So those kind of things are I think, for business founders or entrepreneurs that to consider is whether you're picking up a very, very niche market that have limited expansion plans or supports, or are you picking something that potentially will have a very broad plans that can actually utilize the foreign capital resources and your data manipulative tools? Or is there anything that you can actually utilize your existing or overseas resources to help the Chinese domestic market thrive in those areas? And those things, the Chinese people are actually very, very open-armed to listen and talk about. And saying that there's something that I mentioned, the fintech innovation regulation is always improving. It's still not done yet, and it's fast improving. Chinese government is constantly studying the fintech regulations, and from the technology side, from custodian side, from all the other possibilities, how to help businesses to actually get access, utilizing RMBs, utilizing foreign capital transactions as well. So those things are constantly in discussion. If it's completely fintech related businesses that they need to understand, or they need to bond with the regulators constantly to understand what the Chinese market is trying to do in the next stage, to what type of business, that help you to be able to steering your strategy fast enough, or in time, because the regulation can be a bit like 1 to 2 days and things got completely cut off. It's just like education. So the risk, like regulatory risk in the SME businesses in China, a lot of them are facing from this area, this risk. You need to find a team or a leaders that should always be able to track what the government's regulation towards your business angle, towards your channels, towards your wider client base as well. And the if the fintech firm or the startups actually are bonded well with the local regulatory elements, then you need to focusing on setting up your businesses with Beijing, Shanghai, all those kind of relevant regions. There's a kind of a local business. I think the reason the cities I mentioned here is pretty much tailored into kind of domestic market favorability. So a lot of like Xiong'an, Guangzhou, Hangzhou, I think those cities are pretty much more for domestic market who wants to actually have a startup businesses to benefit with local markets. And Beijing, Shanghai, Shenzhen, as I mentioned, those are pretty much more adaptive into global and finding the bridge to apply both local and domestic and international regulations, and to be able to kind of build an international exposure towards product as well. There's a little areas that I listed here based on the study, and it's pretty much covered what I said about the high-tech space: artificial intelligence, cloud computing, blockchain, mobile finance apps, and data privacy protection. So data privacy protection is more towards cybersecurity side, and I think that area is not really being highlighted enough yet in the market. Not even just not just China, but I think in overall of the market, it's still not highlighted enough. So those can be a very interesting area to be watch out for. Like this. What could be the next? What are the technology? What are the regulations on the cybersecurity, data security side, and how to provide a very strong and a data controlled, centralized data protection system within China and outside of China. So these topics can be also very interesting to discuss and for another session. And okay, in general, I would like to give you a little bit of idea about how fintech firms structures look like in general. And by saying that is it's fairly simple in a way, but it also kind of can be quite diversified by the nature of the business as well. So normally on the C levels, we tend to get involved into major hires from CEO to COO to CTO, CMO, etc. And the title doesn't really mean anything for a lot of cases, because it matters is what matters the most is what this person can do. Sometimes the BD people can also be called marketing officers, or they do client expansion, but also sometimes they do marketing as well. So we need to find out what the founders are really looking into. And but in general, there's similar to everywhere, every company, there's front desk, there's mid office, there's a back office. So by saying that, the front desk is mainly people who are attracting capitals, attracting clients, deploying product to the market, finding customers, and then you will have the supportive, what they call a mid office, potentially that doing product design and product management, understanding the client demands and doing client service, for the post-sales stage as well. And marketing and sometimes goes into other ways. You have to maintain your brand or launching new product, so you need a lot of help from marketing team as well. Admin is fairly, it's always essential, but sometimes people are not really paying enough attention on admin people hiring. But high quality admins is very efficient, I have to say. Sometimes what we find is working with HRs who doesn't really understand the business itself, or it doesn't really understand the strategy of the business. It brings a lot of gaps when you're using recruiters trying to tell a good story about your firm, selling a good perspective of your firm. if the HR couldn't deliver it, the recruiter are always finding it's very hard to sell. And this is why we tend to work with business leaders directly rather than working with HRs. And for some high quality companies, it's very straightforward. Good leaderships in my experience are always willing to share more ideas and be more transparent, telling about their gaps, difficulties, and where, you know, the idea is to work with recruiters who can help them speak into a good perspective, a good target, good development plan of the firm. So, you know, a good business leader is going to be very, very from characteristic side, from credibility side, is going to be very approachable and very attractive to talents. So by saying that, normally we tend to work with business leaders who are willing to share and always bond with us, and you know, analyzing or understanding what they're facing, what kind of strengths, what kind of weaknesses they're experiencing, where are the gaps, where are the challenges. So, you know, it in the end, they becomes our friends because of that, because we can think thoroughly, because we are speaking to the market on a daily basis, trying to understand what other businesses are doing, how they are conquering all the other similar difficulties, and where, you know, where we can help people, where we can find people, actually help them bridging all those gaps. So culture, on the other side, I think this is an interesting topic, because most of the foreign capital team, or, you know, a lot of founders are, if they're not domestic Chinese, we can easily sense their business model, the way that they work, are very, very entrepreneurial driven, and people tend to sit in the position, sit in their own seat, but understand the business wider, better. And they always share ideas, always talk about the things. As I mentioned, good businesses will always identify the problem and try to find solutions together. And that is the typical culture of a westernized or a foreign startup businesses. And the work-life balance, I would say, is pretty much, it's okay. It's not very hardcore in comparison. I think for a lot of domestic Chinese firms, they are worse. And but somehow I think the Western national founders are fairly creating a very entrepreneurial, self-motivated, very highly autonomous environment that people normally would drive their own motivations to work overtime or to work long hours to help the founder find solutions. And that's where I find it's very attractive for some of the clients we work for. They, you know, the leaders' ego it's very down on the ground. It's very flat structured. People are trying to, you know, look into the same target and try to, you know, participate together, and that's how I find it's different from domestic players. A lot of Chinese founders are putting a very high ego in there. They're a little bit of a heroic mindset in there, because they feel that they are the person who actually initiate ideas. They are the people who find capitals. They actually controls a lot of resources in their own hand, and the business structure in domestic companies, it can be very, the information, it can be very diversified. The digestion of information internally, sometimes it can be quite inefficient within domestic players. And the pay structure on the other side, I think it's we can talk about it for the next page that I would like to highlight. So pay structures of fintech startup are generally sort of split into base, bonus, and equity. And for major C-level and director level above, they will easily get an equity allocated. But in different companies, the perspective are slightly different. But in general, I think the Chinese domestic fintech firms are always tend to pay higher on base and lower on bonus and equity shares. And because I think that people tend to give a bit more guaranteed push on base salaries. It doesn't really matter on your performance. If your sales leaders, your sales revenues are it can be adjustable, but your base salary, if we really think you can do this, you will be guaranteed with a base salary that with all your hard working overtime, and you will feel satisfied enough, happy enough that you have a solid pay coming into your house to feed your family every month. So Chinese founders tend to do that a lot. And however, on the other side is the foreign capital players are more on the providing more incentive structures on the equity and the bonus side, and the business growth or share of interest or share of benefits for everybody in the firm. They tend to create that culture across the firm from junior levels as well, and especially for the front desk people, that they would encourage people to go further beyond of their, to exceed their P&L targets as well, and to bounce ideas, to create new markets and create new products. And those will also be very incentive on the product team, developing team, to get a good reward. So that's you can tell from the figures. It's basically a market research recently done by a few local advisor houses on the fintech startup businesses pay structure, which aligns to what my experience across the C-levels, especially, pretty much very accurate. And it won't really go over exceeding. But I think if you look at RMB 1 to 3 million, I think the 3 million end are pretty much offered by the domestic players. And then you can actually picturing that they, whoever has 3 million in their pocket on base salaries, then their expectations on bonus and equity can be limited. That's how you read those figures. And in general, insurtech industries at this stage are across all the other fintech industries are pretty much on the lower pay range. And I think the main reason is because the insurance companies, their revenues and their applications towards the market is not on a very high transaction, a very cash flow driven type of business services. So that is correlated to their capital holds or their revenue generating target in general. It's going to be more towards risk reserve and revenue generating on stabilized perspective, where you don't really see a lot of big growth into those markets. They're looking into long-term stable service plans, high quality plans for clients. And I also listed a few sort of areas that from the last page of 2021 fintech hiring demand. It's quite straightforward, actually. The product management side I would like to highlight is because we come across a lot of product management topic in the market, not just in China, but a lot of clients realize with a lot of high tech products or startup teams that it's easy to find people who can do products, and it's easy to find people who can sell it, but who actually, the salespeople sometimes don't have a full, a strong knowledge to understand how to manage a project, how to interpreting clients' demands and translating that into product design solutions. So product management talent is the people who actually can understand both, who can have this kind of commercialized quality, able to speak to the market, and also understanding the product, the fundamental of the product, the development process of the product, how to do the coding, how to do programming, and is that realistic, or how to educate clients to adjust on the product range as well. Those product management people are in a very, very, a good product manager, sometimes it can be equivalent to a very good sales manager. So that level of talents that we found has been missing to a lot of fast advanced fintech and technology market. And another point I would like to highlight is the information cybersecurity side. Of course, those areas I think Chinese government are putting a lot of efforts on. A lot of research backed startups would be highly welcome to consider building their products in Chinese market at this stage. Maybe not utilizing them on real business use, but research driven platforms who are aiming to provide solutions for domestic market. It will be pretty much welcomed. And that's in general, hiring developers, hiring programmers, where we found that on the programmer or DevOps, on the computer science talent perspective, the local hires are fairly okay, but to attract global candidates, as I mentioned before, a lot of American graduates, Chinese expats that is waiting for graduation this year, or especially that I spoke to a few graduates recently in the US. They're still pretty much highlighting the career search plan from domestic US first. And normally the trend is, if they're not being able to secure a position, they will consider to go back to Chinese market. I think that is that the reason for that, I think mainly is because they have a very strong community that come from sort of computer science Chinese students community, and they talk about this a lot. They do a lot of internal referral to graduate schemes, and they found that a lot of strong big brand name, even the US ones in China, are actually working very long hours, longer than the ones in America. So the living style, the lifestyle, the work ethic is another topic to think about when people here in China are trying to attract global candidates to come back. But local talents is fairly easy because it's still very under management. You can easy to do campus hiring, recruiting, and reference and internal referral is always very, very straightforward. So I don't really have much to add on those space, but happy to listen to any questions or any opinions that you can just message me on. And I think that is the general view of what I can provide for my current scope within the market on the recruitment side, and I hope that's helpful. Hopefully we can have a further dialogue onto other topics as well, and I believe that people Sinofy will share my contact details if anyone are seeking for a one-to-one discussion in the next stage. Thank you so much. Cheers.
Thank you, Lingyi, for your great insights within the industry. I'm sure that many of us found it very useful. I'd like to thank you and the rest of the speakers for contributing to this webinar today. We at Sinofy feel honored to have you here sharing your knowledge and expertise. Now, I would like to thank our partners and mostly our attendees for being here. Till next time, bye-bye.